In this video, we will be discussing about this 2017 A-level Economics MCQ paper. First question, which one of the following is not a factor of production? So we know that in economics, we have four factors of production. First one is land, second one is labor, third capital, and the last one is about entrepreneurship. So let's recognize the option which doesn't show us a factor of production. Right, the first one, natural resources. So we all know the natural resources that are used in the production process, we recognize as land resources. And human resources, if not technically, the mental and the physical effort of humans, we recognize as labor resources. Third one is capital, but this fourth one, money, we do not consider this as a factor of production. And last one, entrepreneurship. So that's the fourth factor of production. So all the other represent factors of production except this fourth option. So that's the answer. Right. Second one, the problem of scarcity. So this is not the first time that we get a question from scarcity. So we know that in this economy, the wants are unlimited. Right. In economy, wants are unlimited. But the available resources are limited, right? The available resources to fulfill those wants are limited. This mismatch between unlimited wants and the limited resources, we recognize as scarcity. So if you know this simple thing, you can find the answer for this question too. So it says, the first one says, scarcity exists only in developing economies. No, scarcity is something common to any economy. Second one, exists only in market economies. No, as I mentioned, it's common to any economy. It could be a market economy, it could be a command economy, or it could be a mixed economic system. For any given economy, this problem of scarcity is common. Third one, exists because prices of goods and services are too high. No, that's not scarcity. Scarcity is always the mismatch between unlimited wants and the limited resources, and it doesn't have anything to do with the prices of goods and services. The fourth one, exists now but will be eliminated with economic growth. No, that's why I earlier told you that this is a common problem for any type of economy. It could be an underdeveloped economy or a developed economy. For all the economies, this is a common problem. So this is also wrong. The fifth one says the problem of scarcity exists because of limited resources. Yes, 100% true. The resources are limited compared to unlimited wants, and that's why this problem of scarcity arises. So the answer for this question too is the fifth one. Right. Third one, which of the following is assumed in constructing a production possibilities curve? So we know that this production possibilities curve is constructed under several assumptions. And if I just show you the main set of assumptions, right, these are the main ones. We say that this economy produces two goods, right? Only two goods. That's a first one. Second one is we say that all the available resources are used in the production process under full employment and full production. That's the second one. Third one, we say amount of resources, right? Amount of resources remain constant. The fourth assumption is even technology we assume to remain constant. So these are the main assumptions. We have several other assumptions as well, but under main assumptions, we recognize these four. Right. එතකොට question එක අහන්නේ, which of the following is assumed in constructing the production possibilities curve? Right. The first one is the economy is using its resources inefficiently. See, inefficiently, that's not what we assume. We assume that the economy utilizes its resources efficiently. under full production and full employment, not inefficient. So this is not an assumption that we make when drawing the PPC. The second one says resources are utilized to produce only private goods. No, I earlier told you that we assume the fact that the economy produces only two goods, and these two goods can be any two goods, right? Not only private or public, it can be any two goods, right? The third one, full employment but not full production. See that now full employment is one of the assumptions, not full production. No, we even assume that the economy utilizes resources under full production. So this is also then wrong. The fourth one, production technology is fixed. See, technology remains constant. So that's the idea. So this is the assumption that we make when constructing the PPC. So that's the answer. Fifth one says there's no inflation in the economy. No, that is not a relevant assumption that we make when constructing the PPC. Right. The fourth option, an economy has achieved productive efficiency when. All right. So let me tell you the meaning of this term productive efficiency. Productive efficiency. So this is a situation where the economy has achieved both full employment and full production. If the economy has achieved both full employment and full production, we say that this economy has achieved productive efficiency. And what happens when the economy achieves productive efficiency? This economy will be operating at a point on the PPC. So let's assume that on this side we get the good X and here we have the good Y. So if the economy is operating, let's say at this point A, which falls on the PPC, see what happens. If they try to increase the production of good X, right? If not simply, if they move from point A to point B, what will happen? Yes, it's possible to increase the production of good X, right? Production of good X will increase, but as a result, the production of good Y will decrease. So this amount that we sacrifice from good Y in order to increase the production of good X, we recognize as the opportunity cost, right? That amount we sacrifice, we recognize as the opportunity cost. See, this is the conclusion then. The conclusion is productive efficiency is a situation where the economy has achieved both full employment and full production. And when the economy achieves full employment and full production, if not simply the productive efficiency, it operates at a point on the PPC. And when the economy operates at a point on the PPC, right, it can increase the production of one good only by decreasing the production of the other good. So if you have this theoretical knowledge with you, you can simply select the answer for this question 4. The first one, it is unable to produce more of one good without producing less of another. See that now, that's what I explained to you earlier, right? Once the economy achieves this productive efficiency, if it needs to increase the production of good X, that will have to sacrifice the production of Y. Otherwise, it's unable to increase the production of one good. So this is the answer. But we will go through the other options as well. Productive efficiency when marginal cost of producing each good is equal to its price. See, this talks about the allocative efficiency, not productive efficiency. Right? This is about the allocative efficiency. It has eliminated all negative externalities. See that now, there's no such connection between externalities and achieving productive efficiency, right? So there's no connection. Fourth one, the resources are allocated to produce goods and services most wanted by the society, most preferred by the society. So once again, it's about the allocative efficiency, not about the productive efficiency. Fifth one, it is self-sufficient in all products. No, see that now, there's no again connection. This is totally irrelevant. So you don't need to consider this thing. So the answer for this question 4 is the first one. Look at this question 5 now. In question 5, it says the fundamental economic questions of what to produce and for whom to produce are essentially interdependent because, okay, so we just need to select the reason for this. Now, the statement says that these two basic economic problems are interconnected. If not, they are dependent on each other. So there's a connection between these two. Right. So let me explain it in this way. If you look at this first option, it says different patterns of income distribution generate different patterns of demand and therefore different patterns of resource allocation. See, what to produce? We recognize this one as a problem of resource allocation. And for whom to produce? We recognize this one as a problem of distribution. Problem of distribution. If not, specifically, we recognize that as a problem of income distribution in the economy. Right. The first option talks about both these problems. See, in the first part, they just talk about the problem of whom to produce. And in the last part of this statement, they just talk about the problem of resource allocation. Right. So what's the idea behind this thing? What's the idea behind this statement 1? Look at this very carefully. It says different patterns of income distribution generate different patterns of demand and therefore different patterns of resource allocation. So let me take two different economies to explain this thing. Right. Just imagine that we have this economy 1, and on the other side, let's say that we have this second economy, economy 2. Right. So if you need examples for these economies, just take this as Sri Lankan economy and imagine that this is Dubai. Right. So just consider these two economies. Okay. Now, if I take these three variables, income distribution, demand, and the resource allocation into this table, wait. Right. So let's talk about the income distribution in each economy. Also, we'll talk about the demand in each economy. And later on, let's focus on the resource allocation. Resource allocation. Right. Now, just assume that in Sri Lanka, majority of the people are middle class. Right. So the majority of the people are middle class. So these are the middle class people in Sri Lanka. And assume that only minority of the people are rich. Let's assume so. Majority are middle class people and the minority are rich people. If so, based on their income distribution, right, the goods that they demand differ. Now, for example, majority of the middle class people will demand more and more, let's say, they will demand more basic cars. Just imagine so, basic cars. And that the minority of the rich people will demand luxury cars. So there's a demand, there's a higher demand for basic cars in this economy, but there's a low demand for luxury cars in this economy. ඔය එක ඇත්තටම හිතලා බලුවොත් basic cars 50කට එකක් වගේනේ තියෙන්නේ රේෂියෝ එක ලංකාවේ luxury cars. ඊටත් වඩා සමහරට රේෂියෝ එක වැඩි වෙන්න පුළුවන්. එතකොට ඕක තමයි income distribution එකත් එක්ක එන demand එක. If the majority of the people are middle class, they will just take basic cars. The minority of the rich people will buy luxury cars. So if you look at the demand is very high for basic cars and the demand is very low for luxury cars. Hope you understand that. So that the resource allocation, these profit seeking producers, they will allocate more of the resources to the goods where they receive a higher demand. So if there's a higher demand for basic cars, right, then the available resources, the majority of the available resources will be allocated to produce basic cars. So let me write produce more basic cars, produce more basic cars, and then the economy will produce lower amount of luxury cars, lower amount of luxury cars. But on the other hand, look at this second economy, Dubai, for example. Majority are rich people, right? Majority are rich people, only minority are poor, right? So minority are poor, but the majority of the people are rich. If so, right? If so, their demand is different from the demand that we see in Sri Lankan economy. So in that economy, the demand for basic cars is very low. So low demand for basic cars. But there's a higher demand for luxury cars. If so, when the producers allocate the available resources among the competing wants, they will allocate more resources. See, now they allocate more resources to produce luxury cars and lower amount of resources to produce basic cars. So lower resources to produce basic cars and higher amount of resources to produce luxury cars. See that now. Finally, what do we see? By looking at this table, what do we see? You only see the fact that this income distribution, right? Different patterns of income distribution generates different patterns of resource allocation in the economy. Why is that? Because when income distribution changes, demand changes. And when demand changes, the producers allocate resources according to the changing demand. So that these two problems are interconnected. If not, they are dependent. So that's the explanation, right? So that's what the first option tells you. Different patterns of income distribution generate different patterns of demand so that there will be different patterns of resource allocation in the economy. 100% true. And that's why we say that these two problems are dependent on each other. So this is the statement that is true for this question 5. But we will look at the second one as well. Second one says different patterns of production methods generate different patterns of income distribution. See that now in the main part of the question, they just talk about what to produce and for whom to produce. But in the second option, they just talk about, see, different patterns of production, how to produce and for whom to produce. මෙතන තියෙන දෙක ගැන නෙමෙයි මෙතන discussion එක යන්නේ. So this is irrelevant there. Third one, income and wealth are concentrated in the hands of economically powerful segment of society. See, this has nothing to do with the connection between these two. This only talks about the inequality, right? It only talks about the inequality in income distribution. It doesn't show the connection between these two problems. Fourth one, markets cannot be relied upon to allocate resources efficiently. See, once again, if there are negative externalities, if there are, let's say, externalities in general, if there are externalities, yes, the markets cannot be relied upon to allocate resources efficiently. So that is somewhat true. But the problem, this statement doesn't talk about the connection between these two problems. So this is again irrelevant for the question. Right. The fifth one, a particular level of output may be produced by many different combinations of inputs. See, now here they just talk about the output and the input, not the relationship that exists between the two basic economic problems, what to produce and for whom to produce. So once again, this is irrelevant. So there's only one relevant statement, and that's the first one, and that's the correct one for this question 5. Right, look at the sixth one. It says the main function of prices in a market economy is to. Okay, so this is not the first time that we discuss a similar question. There are three main functions of price in a market economy. So what are the three functions? The first one we recognize as signaling function, and the second we recognize as incentive function, and the last one we recognize as rationing function. Right. So what's the meaning of this signaling function? This means price provides, let me write, price provides information. Price provide information to decision making units. Decision making units. The meaning of incentive function, the meaning is we say price encourages or discourages decision making units. Decision making units. And the last one, rationing function, price helps to allocate scarce resources and goods and services. Goods and services among the members in the economy. So this is the meaning of the three functions. And now we'll try to select the most suitable option. Right, the first one, generate more profit to the entrepreneur. See that now it doesn't talk about any of these functions. Second one, guide households to choose investment opportunities, not specifically investment opportunities. Right, so that again doesn't align with one of these three main functions. The third one, determine the elasticity of demand, again irrelevant. Fourth one, improve the distribution of income. See, improving, this talks about the rationing function, talks about the distribution of income, but it doesn't talk about improving this thing. So again, irrelevant. And the fifth one, allocate scarce resources among alternative users. See, that is the third function. Under rationing function, I just told you that price helps to allocate scarce resources and also goods and services. So this talks about the first part of rationing function. So this is the answer for this question 6. Right. The seventh one, it says, which one of the following change causes the market demand curve for a good to remain unchanged? See, when one of these changes, the demand curve remains unchanged, and we just need to find that option, that answer. Okay, so let me show you the demand function, right? Demand function is, we say quantity demanded is a function of price of the considered good, prices of related goods, consumers' income, consumers' taste, future expectations regard to the prices, and then the number of consumers and other factors. So this is the demand function. And in this demand function, we say, if you just focus on this first factor, the price of the considered good, when the price of the considered good changes, what happens to the demand curve? When the price of the considered good changes, nothing happens to the demand curve, but the point on the demand curve moves maybe downwards or maybe upwards. Now, for example, if you assume this price to increase, right? If price increases, then the quantity demanded will decrease so that the point will move upward. If this is A, point moves to B when the price increases. And if price is decreased, then the quantity demanded increases so that the point moves downwards along the demand curve. So if it is initially at this point A, now it moves to point C. See, due to the change of the price of the considered good, nothing happens to the demand curve. Only the point on the demand curve either moves upward, if not, it moves downwards. Nothing happens to the demand curve. But if any of the other factors change, then the whole demand curve changes. If these factors change in a favorable manner, demand will increase so that the demand curve will shift to the right side. If they change in an unfavorable manner, demand will decrease so that the demand curve will move, the demand curve will shift to the left side. Right? See, if a change of one of these factors happen, the whole demand curve changes. But if the price changes, nothing happens to the demand curve, only the point moves upward or downwards. Okay, so the answer for this one has to be then what? The price of that good, price of the considered good. If it changes, the demand curve remain unchanged. Eighth one. Which one of the following combinations of income and price elasticities of demand is consistent with a normal good which has a downward sloping demand curve? Okay, so this is a normal good. These are the information we get, right? This is a normal good and the demand curve slopes downward from left to right. On this side, we get the quantities. Here we get the prices. And then you just need to pick the correct combination which talks about the income elasticity and the price elasticity of demand for these given information. Right. So if it's a normal good, it simply indicates that there is a positive relationship between consumers' income and the demand, right? Which means if income increases, even the demand increases. On the other side, if income decreases, even the demand should decrease because it's a normal good, right? Then if you calculate this income elasticity of demand, since there's a positive relationship between these two variables, this income elasticity of demand will be positive. So one of these must be the answer. And see, in the next part of the question, they say that this has a downward sloping demand curve. If it has a downward sloping demand curve, it indicates a fact that we have a negative relationship between P and QD. And what does that mean? If P increases, QD decreases. And on the other side, if P decreases, QD increases. So due to this negative relationship that exists between P and QD, when finding the price elasticity of demand, the answer is always negative. So the answer for this question 8 is the second one. Right. Now look at this question number 9. In question 9, it says, suppose there are only two goods, A and B, which means for this entire market, for this entire economy, we have only two goods, right? Only two goods. So what are the two goods? We get this good A, also we have this good B. And then it says, other things including consumers' income, money income remain unchanged. See that now. Money income. Money income. If not, what are the synonyms that we use for this? Money income. If not, we can say monetary income. If not, we can just recognize this to be, in very simple terms, we can just recognize this to be the person's salary. Right? So what happens to the money income, monetary income, or the salary? It remains constant. It remains constant. Right? It remains constant. The next part. So when all these things remain constant, what happens? The price of good A falls. See, the price of good A falls. So let me write it here. Price of good A falls. So what happens? The salary remains the same, but the price of the good A decreases. So that the quantities, the amount of goods that you can purchase increases. Right? If not, in technical terms, your real salary or the real income of the purchasing power increases. Right? So if you need, I can do one example and show you this thing. So imagine that we have mobile phones here, right? We have mobile phones and the person's income is just 1 million. Person's income is 1 million. So initially the price of a mobile phone is just 100,000. But later on, this is a situation 1. And in the situation 2, the price of a mobile phone decreases to 50,000. So earlier, this is the person's monetary income. So in the previous situation, the person's real income, the amount of goods that the person can consume, right, is just 10. But in the second situation, when the price of the good reduces, right, it increases to 20. See, right? When the monetary income remain constant, if the price of the good falls, what happens to the real income? Real income increases. So let's get this idea to this question, right? So the monetary income, the salary remains constant, price of the good A falls. As a result, what happens? The person's real income increases. Person's real income increases. For some reason, right? For some reason, the person's real income increases. And as a result of this, what happens next? If the price of good A falls, the demand for good B increases. So suddenly they just talk about the demand for good B. So no problem. So you just write it here. Demand for good B increases. See, look at these two variables now. What happens to the real income? Real income increases. And then what happens to the demand of this good B? Even that increases. So what type of a relationship you find between these two variables, the real income and the demand for good B? When one increases, even the other increases, which means the relationship that exists between real income and the demand for good B is positive, right? That is positive. If there's a positive relationship between the person's real income or in general the income and the demand, how do we recognize such goods? මේ කලින් question එකේ තමයි ඔය ඉගෙන ගත්තේ මම මේක delete කළා එතන ලියලා තිබුණ එක delete කළා. If the relationship that exists between consumers income and the demand, if it is positive, we just recognize those goods to be normal goods. කලින් question එක ඔය ඉගෙන ගත්ත දේ. ඊට පස්සේ එහෙනම් දැන් මම අහනවා ආයෙමත්, if the relationship that exists between the person's real income and the demand for this good B, if it is positive, then this good has to be a normal good, right? This has to be a normal good. ඔච්චරයි අපිට කියන්න පුළුවන්. හරිද? ඔච්චරයි අපිට කියන්න පුළුවන්. වෙන කිසිම දෙයක් කියන්න බෑ. දැන් ඔන්න බලාගන්න the first option. Right? The first option says A is a normal good. See, we don't know this. That is a problem. If you need to recognize whether this is a normal good or an inferior good, as I mentioned in this 8th question, you just need to look at the relationship that exists between consumers' income and the demand for good A. But the problem in this question, they don't mention what happens to this demand of good A when the person's real income or income increases. It only talks about the changes that happen in the demand for good B. So that I can't comment on good A. Without the sufficient information, I can't comment on good A. I can't recognize what happens to the demand for good A when the person's real income increases. In I can't comment on this thing. Second one, both A and B are normal. See, B is a normal good, but I can't comment on this good A. Third one, A is an inferior. I don't know when demand increases, when income increases, if the demand for good A, if it is decreased, I would have recognized that to be an inferior good. But right now, with the available information, I can't comment on that. Fourth, B is an inferior good. See that now, it's not an inferior good. There's a positive relationship between person's real income and the demand, so that this is a normal good, not an inferior good. So this is also then wrong. The fifth one, B is a normal good. That's the correct answer for this question 9. Right, look at the 10th one. In the 10th question, it says, an increase in the price of rice. Wait, I'll send this to the other side. Okay, now let's read this question 10. It says, an increase in price of rice has caused the demand for bread to rise by 30%. See that now, the price of rice get increased, and as a result, demand for bread increases by 30%. The cross elasticity of demand between rice and bread is 3. Which change in price of rice has brought this about? Okay, so this is what you need to do. Just try to calculate the cross price elasticity of demand. So how do we calculate this thing? We have several equations, and this is the basic equation. We say the percentage change of QD divided by the percentage change of price, right? But in this case, we just consider the percentage change of QD in bread when the price of rice changes by a particular percentage, right? So this CED is given to us as +3. Value comes here as +3. So in the numerator, we find plus 30% because it increases by 30%. And based on these two values, we can find the percentage change in price of this good rice. So the percentage change in price of rice is how much? That is simply 30% divided by 3%. Then the answer is just 10%. See, from this calculation, we only know if the price of rice changes by 10%, this 10 is also a plus value, which means if the price of rice increases by 10%, right, there will be a 30% increase in demand for bread. ඕක තමයි අපි දන්න දේ. එහෙනම් අපි දැන් ওই ටික බලමු. price එක මොකක් වෙන්නද ඕනේ? 10% වලින් වැඩි වෙන තමයි ඕන. right. එතකොට which change in price of rice has brought this about? Okay, from 80 to 90 per kilogram. See that now? Look at this change. If it was initially 80, if it needs to increase by 10%, then the new price has to be not 90, it has to be 88, because simply 10% on 80 is just 8, and then 80 plus 8 is 88. Simple. If the price is initially 60, if it needs to increase by 10%, then the new price has to be 66, not 72. එතර first එකේ වෙන්න ඕනි 88, හැබැයි තියෙන්නේ 90, that is wrong. Then second එකේ වෙන්න ඕනි 66, but තියෙන්නේ 72, that is again wrong. If it is initially 80, it has to be 88, but here we see 85, which is again wrong. 70 නම් එක වෙන්න ඕනි 77 කියලා, that is also wrong. 80 නම් 88 වෙන්න ඕනි, ඒක හිමම වෙලා තියෙනවා. And that's the answer for this question 5. Right, the 11th one. The 11th one says, which of the following is true in the market for a certain product if producers consistently are willing to sell more at the going price than the consumers are willing to buy? So simply, this talks about an excess supply. At that given price, The consumers are willing to buy less, but the producers are willing to supply more. So we see, if not in this market, we get an excess supply. So excess supply එකක් market එකේ තියෙන මොන වෙලාවටද කියලා බලන්න ඕනේ. ඔයාට පුළුවන් හරිම සරලව මෙන්න මෙහෙම කරන්න. Wait, we'll send this one here. Okay. ඔයාට පුළුවන් හරිම සරලව මෙන්න මෙහෙම curves ටිකක් ඇඳගෙන ඔය කියන කතාව මොකද්ද කියලා බලන්න. Right. We get the quantity, we get the price here. This is the demand curve and this is the supply curve. So based on this demand and supply, here we get the equilibrium price and the equilibrium quantity. So if quantity supplied is always greater than the quantity demanded, we must be referring to a situation where the price is above the equilibrium price. So if the price in the market is above the equilibrium price, see what happens, the quantity supplied is always higher than the quantity demanded. Quantity supplied is higher than the quantity demanded. එන එක වෙන්නේ only if the market price is higher than the equilibrium price. ඔච්චරයි. වෙන මුකුත් වුණොත් ඕක වෙන්නේ නැහැ. එහෙනම් අපි බලමු demand is highly inelastic. නේ elasticity අදාළත්වයක් නැහැ. මෙතන තියෙන්නේ price එකේ අදාළත්වයක්. If the price is higher than the equilibrium price, there will be an excess supply in the market. ඒ නිසා demand is highly inelastic, supply is highly elastic. ඕවා අදාළ ප්‍රශ්න, ඒ කියන්නේ අදාළ දේවල් නෙමෙයි. Third one, the product is inferior. See that now, just because the product is inferior, even for that inferior good, we have this market equilibrium. At the equilibrium, the demand and the quantity both will be equal. එතන inferior good එකක් වුණත් ඒකෙත් equilibrium price එකට වඩා market price එක වැඩි නම් then again there will be an excess supply. එතකොට මේක inferior ද නැද්ද කියන එකත් එක්ක නෙමෙයි excess supply එකක් නැද්ද තියනවද කියලා බලන්නේ market price එකත් එක්ක. Fourth one, there's a price ceiling on the product. Then price ceiling කියලා කියන්නේ මොකද? Price ceiling කියලා කියන්නේ maximum price, right? Maximum price. So maximum price, if it is an efficient maximum price, effective maximum price, that is a price lower than the equilibrium price. So at a price lower than the equilibrium price, there will be an excess demand, not an excess supply. එතන මේක වෙන්න බෑ ආන්සර්. The fifth one, there's a price floor on the product. Price floor කියලා කියන්නේ it's about the minimum price. So the minimum price, if it is an effective minimum price, that has to be a price above the equilibrium price. So this is where you get this minimum price. So due to the minimum price, the market price of the good is higher than the equilibrium price. So there will be definitely an excess supply in this situation. So the answer for this question 11 is the fifth one. Right. Look at this 12th question. In the 12th one, it says, this is very easy, I think. Market demand and supply curves for a certain consumer good is represented by the following equations. By giving the two equations, they just ask us to recognize the equilibrium quantity and the price. So this is like nothing. You make this QD equal to QS. So 80 minus 2P is equal to minus 20 plus 3P. So simply 5P equals 100. So price is equal to 20. Right? Equilibrium price is equal to 20. So you can put this equilibrium price in one of the equations, maybe in the demand equation or maybe in the supply equation. So I will select the demand equation. So when you put that there, 80 minus 2 into 20 is 40. So that the answer is 40. So equilibrium quantity is how much? That's 40. Equilibrium price is 20. එතන මුලින් අහන්නේ quantity එක. එතකොට ඒක 40 වෙන්න ඕන. price එක දෙන්නට අහන්නේ that's 20. So the answer for this question 12 is the first one. Right. Look at this 13th question. In the 13th one, it says, the diagram below represents a competitive market for a certain consumer good. Okay, we have the supply curve. We get the demand curve. See that now, in this market, there's a unit tax. There's a unit tax. එතකොට ඒගොල්ලෝ after tax supply curve එක නම් අපිට දීලා නැහැ. ඒක ඉතින් දුන්නේ නැතත් ප්‍රශ්නයක් නැහැ. So අපි ඒක ඇඳගත්තොත් ඒක තියෙන්නේ මෙන්න මෙහෙම. නේද? ඔක තියෙන්නේ මෙහෙම. මොකද මේ gap එක වෙන්න එපයි unit tax එක. ඒතර ඒ gap එකේ amount එකෙන් supply curve get shifted to the left side. So ඔක තමයි කතන්දරේ. තිබුණත් නැතත් ප්‍රශ්නයක් නෑ අපිට. Anyway, this is S2 and this is S1 and this is the demand curve. ඒතර by giving all this, what do they ask us to recognize? If a specific unit tax is levied on this product by the government, the producer surplus after the tax is the area. See the now producer surplus. They just talk about the producer surplus. They ask us to recognize the producer surplus. See, I always tell you this. What is the region that belongs to producer surplus? After tax, the before tax, the after subsidy, the mukut adala naha. How do we define that region? That is the region above the initial supply curve. Right? That is the region above the initial supply curve. So that has to be the region above this S1. Below the price received by the producer. See, as a result of imposing this unit tax, the market price increases to P2. But that producer has to pay this gap from P2 to P1 to the government as the tax. So it doesn't matter how much they receive from the market. Once he pay this gap to the government as the tax, the amount that he receives, the producer receives is just P1. එහෙනම් අර මගේ කතන්දරේ මොකද්ද? That is the region above the initial supply curve. Right? That's a region above the initial supply curve. So it has to be region above this. And below the price received by the producer. See, below the price received by this producer. එහෙනම් above the supply curve, below the price received by the producer, up to the quantity traded in the market. So after imposing the unit tax, the quantity traded in the market get limited to Q1. එතකොට ඔය conditions තුනම satisfy කරන region එක මොකද්ද? මොනවද conditions තුන? That has to be the region above the initial supply curve. And then below the price received by the producer up to the quantity traded in the market. ඔය conditions තුනම satisfy කරන එකම region එක, that is this region D. So that's the region which shows the producer's surplus after tax. Right? Easy. 14th one. In question 14, it says, if the price elasticity of supply is less than 1. Okay. Price elasticity of supply, PES. So PES is lower than 1. So tell me once again, how do we find this PES? Again, we have around 5 different equations to find this PES. But the basic equation is percentage change in quantity supplied divided by percentage change in price. And if they say that this PES is lower than 1, if it is less than 1, හරිම සරලයි mathematics. මොකද්ද වෙන්න ඕනේ? ඉර උඩ තියෙන value එක චූටි එකක් වෙන්න ඕනි. ඉර යට තියෙන value එකට comparative. ඕකේ අනිත් පැත්ත එකට වඩා වැඩි එකක් එනවා. ඉර උඩ තියෙන එකට හා සමාන එකක් ඉර යට තියුණොත් ආන්සර් එක 1 වෙනවා. ඒතර ඉර උඩ තියෙන එකට වඩා ඉර යට තියෙන එක ලොකු වුණොත් ආන්සර් එක 1ට වඩා අඩු එකක් වෙනවා. ඒක උත්තරක් සරල සිද්ධියක්නේ. දැන් එන ඉර උඩ තියෙන්නේ මොකද්ද? ඉර උඩ තියෙන එක පොඩි වෙන්නයි ඕනේ ඉර යට තියෙන එකට වඩා. එහෙනම් මොකද්ද වෙන්න ඕන? Percentage change of quantity supplied has to be lower than the percentage change of price of the considered good. ඕක තමයි වෙන්නේ. Right? This is what needs to happen. Let's read this thing. If the price elasticity of supply is less than 1, this means the first one, change in quantity supplied is greater than the change in price. No, it talks about the opposite. එහෙම වෙයි if PES is greater than 1. Percentage change in quantity supplied is greater than the percentage change in price. Wait, what's the first one again? Change in quantity supplied is greater than the change in price. Okay. So they just don't talk about the percentage, they only talk about the change. එතකොට ඇත්තට මේක වැරදි. හරිද? ඒ කියන්නේ කොහොමත්ම වැරදි. මොකද අපි බලන්නේ percentage change එක. හරි දෙවන එකේ තමයි අර මම කලින් කිව්ව දේ තියෙන්නේ මොකද percentage change in quantity supplied is greater than the percentage change in price. එතකොට මේකේ ආන්සර් එක 1 වලට වඩා වැඩි එකක් තමයි එන්නේ. Third one, change in quantity supplied is less than the change in price. No, we don't look at the change in quantity supplied. We always look at the percentage change. ඒක අර මටත් පළවෙනි එකකින් දෙවෙනි එකට එනකොට පොඩක් එතකොට තමයි මටත් ඒක මතක් වුනේ. හරිද? The fourth one, percentage change in quantity supplied, okay, is less than the percentage change in price. 100% true. See, we have put the percentage sign. So the percentage change in quantity supplied has to be lower than the percentage change in price. So this is the answer. So fourth one is the answer for this question 40. But look at the fifth one as well. Percentage change in quantity supplied is less than change in price. එක පැත්තක percentage change එක ගැන කතා කරලා අනිත් පැත්තේ change in price ගැන කතා කරන්නේ එහෙම බෑ. දෙපැත්තෙම තියෙන්නේ මොනවද? Percentages. එහෙමයි වෙන්න ඕනේ. So answer is the fourth one. 15th question. It says suppose the demand and supply curves for a competitive market are represented by the following equations. Okay, so you get the demand equation as 60 minus 2p and the supply equation as minus 20 plus 3p. By giving these two, they say in the equations above, QD and QS are the quantity demanded and quantity supplied. Yes, we know. And P is the price. Yes. Suppose government imposes a minimum price equal to rupees 20 per unit. මෙහෙමයි දැන් ඇත්තට මේ වගේ ප්‍රශ්න දාන එක නරක දාන එක කිසි තේරුමක් නැහැ. දැන් කලින් question එකේ මොකක්ද උනේ? මේ කොහේ හරි තිබුණානේ question එක. see මෙතනදී මේ question එක ඔයා තේරුම් ගත්ත දේ තමයි when a minimum price is imposed there will be an excess supply. ඒක අපි තේරුම් ගත්තනේ මෙතනදී. right? When a minimum price is imposed there will be an excess supply. එතන මෙතන කතා කරන්නේ once again the same thing. මොකද්ද? The government is going to impose a minimum price. එතකොට අපි දන්න එකම දේ තමයි there will be an excess supply. එතකොට answer එක එක්ක මේක මේ නැත්තම් මේ අනිත් ඒවා answers වෙන්න බෑනේ එතකොට. පස්වෙනි එක නම් දන්නේත් නැහැ. දන්නේ නැහැ කියලා කියන්නේ තාම දන්නේ නැහැ. නමුත් ඒක අපි බලමු කොහොම හරි මේ දෙක answer එක වෙන්න බෑ. 3 4 answer එක වෙන්න බෑ. මොකද 3 4 වල ගන්න excess demand ගැන. එතකොට ඒක වෙන්න බෑ. ඒ නිසා excess supply එකක් තියෙන එක තමයි සාමාන්‍යයෙන් වෙන්නේ. So we will first find the excess supply equation. So excess supply is equal to quantity supplied minus quantity demanded. So quantity supplied is minus 20 plus 3 times P minus the quantity demanded. මතක ඇතුව write it within a bracket. මොකද you are going to deduct a whole equation from this QS equation, right? So right here QD that is 60 minus 2P. So what happens? You get minus 20 plus 3p minus 60 plus 2p. So this is minus 80 plus 5 times p. That is the excess supply. Right? That is the excess supply. So when the price is just 20, let's see the excess supply. Excess supply is minus 80 plus 5 times we write 20. So minus 80 plus 100 answer is 20. So excess supply is how much? 20 units. Right? Excess supply is 20 units. The first one says lead to an excess supply in the market equal to 20 units, 100% true. So that's the answer for this question 15. The fifth one says අර දෙක වෙන්න බෑ කියන එක මම කලින් කතා කළා. Fifth one says have no effect on the market. ඉතින් ඔයාලට තේරෙනවනේ. මේක හරිනම් මේක වැරදි වෙන්න එපා. මොකද effect එකක් තියෙන නිසානේ we see an excess supply. ඒතර excess supply එකක් තියෙන එක හරියන්නයි effect එකක් නැහැයි කියලා කියන එක හරියන්නයි දෙකක් වෙන්න බෑනේ. ඒවා mutually exclusive. ඒවා mathematical ගත්තොත් mutually exclusive නේ එතකොට. ඔයාලට probability මතක නම් O level maths. ඒතර ඒවා mutually exclusive නිසා එකක් හරියනකොට ඉතින් අනිත් එක obviously වරදින්නයි ඕන. Right. 16th one. The law of diminishing returns states. See that now. The law of diminishing returns. This is the law. See, in unit 4, you talk about, if not, you learn two different laws. So what are these two laws? The first one is this, the law of diminishing returns. The other one is the law of returns to scale. If you remember the fundamental difference between these two, this law of diminishing returns is related to the short run, whereas the law of returns to scale is related to the long run. එතකොට මේකේ option එක මොකක් වුණත් that option has to be related to the short run. ඔක තමයි වෙන්න ඕනේ දේ. But wait, I'll show you the theory note before we discuss the answers. I'll show you the theory note related to this. All right, look at this note now. The law of diminishing marginal returns. I have given you two different approaches to define this. The first approach is production approach to define the law of diminishing marginal returns. The other one is cost approach to define the same. So the first one, if you go for this production approach, it says in short run, that's why I told you that this law of diminishing marginal returns is related to the short run. So in short run, when increasing the production only by changing the variable inputs while keeping fixed inputs constant, marginal product and the average product of the variable inputs start to decrease after a certain point. Or curves ටික බලුවොත් ඒක පේනවා. This is called the law of diminishing marginal returns. So ඒ කතාව වලට මේක මෙතන පැහැදිලි මොකද්ද? These are the product curves. Right? These are the product curves. So the average product and the marginal product start to decrease after a certain point. Start to decrease after a certain point. And why is that? That's due to the law of diminishing marginal returns. So that's just one way of defining this. If you look at the second approach to define the same, the cost approach, it says in short run, when increasing the production only by changing the variable inputs while keeping the fixed inputs constant, ඔක්කොම සමානයි මෙතනට වෙනකම්. හැබැයි මෙතන කතා කරන්නේ marginal cost and average cost. Right? Marginal cost and average cost of the variable inputs start to increase after a certain point. See, if these are the costs, they start to increase after a certain point. But if those are the product curves, the marginal product and the average product, right? Then they will start to decrease after a certain point. දෙකක් product curves වලින් කතා කරනවා නම් කියන්න ඕන they start to decrease after a certain point. But if you define this thing based on the cost approach, you just need to mention that MC and AC start to increase. AVC start to increase after a certain point. මොකද අපි ඒ curves අඳුරගන්නෙත් එහෙමම තමයි. ඒ කියන්නේ wait. ඒ කියන්නේ මෙන්න මේ product curves වල අර upside down reflection එකක් තමයි cost curves වෙන්නේ. ඒ නිසා when these product curves start to decrease after a certain point, the cost curves start to increase. ඒ නිසා ඔය විදිහට තමයි ඔකේ definition එක යන්න ඕන. And now let's get into this question again. So I told you this law of diminishing returns is related to the short run, and the first option says as the size of the plant increases. Totally wrong. මොකද if the scale of the plant increases, that belongs to the long run. So this should not be relevant to the diminishing marginal returns. Second one, as the size of the plant increases. So once again, that's totally wrong. No need to read the other part. This talks about the long run, the scale of the plant. Scale changes in the long run. Size of the plant changes in the long run, not in the short run. Third one, as a firm uses more of a variable input, yes, variable inputs are changed. Given the quantity of fixed inputs, okay, the fixed inputs remain constant at that given level, its marginal product eventually decreases. See, or මතක නම් product curves වලින් බලුවොත් මොකද වෙන්න ඕන? MP should start to decrease after a certain point. එහෙනම් ඒක හරි. අර තිබුණ පළවෙනි definition එක. So answer for this question 16 is the third one. But we will go through the other options as well. As a firm uses more of a variable input, given the quantity of fixed inputs, its average cost eventually decreases. මේ average variable cost should eventually increase. එහෙම තිබ්බනම් මේකත් ගන්න තිබ්බා. The fifth one says, this is wrong then. The given one is wrong. The fifth one says, as the firm uses more of a fixed input. See, if the fixed inputs are changed, it relates to the long run, not the short run. So that's why this is not relevant. Right. Now we move to this question 17. But before that, let me erase all this. We don't need this now. Right. Look at this question 17. It says, if there are implicit cost of production, what will happen to the accounting profit, economic profit? See, then now by looking at the options, we can understand that this is the direction that we should follow, right? Again, අපි try එක දෙන්න ඕන when there are implicit costs, accounting profit එක කීයක් වෙයිද, economic profit එක කීයක් වෙයිද, ඕක තමයි අපි බලන්න ඕන. right. එහෙමනම් අපි මෙන්න මෙහෙම වැඩක් කරලා ඔය ටික තේරුම් ගන්න බලමු. ඔය කියන profit තේරුම් ගන්න අපි මෙහෙම දෙයක් කරමු. right. We will first take table. In this table, I'm going to give you two situations. Right? Situation. So situation 1 and then situation 2. In both situations, let's assume the total revenue to be 100. Right? Total revenue is 100. And again, in both situations, let me take this explicit cost. Right? Explicit cost. If not, simply let me write the accounting cost. Accounting cost. Both are same, right? Explicit cost, accounting cost, both are same. So again, I'm going to give you the same value in both places. Let's assume this to be 50, right? That is 50. Counting cost is 50 in both situations. And then the implicit cost, right? Implicit cost. Implicit cost. Then කෙනෙක් වැරදි හිතනවා අරක accounting cost, implicit cost කියන්නේ economic cost කියලා නෑ නෑ. Economic cost කියලා කියන්නේ මේ දෙක එකතුවට. හරිද? නැතුව implicit cost වල නෙමෙයි. හරි. ඒතර අපි කියමු in the first situation implicit cost is 0, but in the second situation implicit cost is 10. Right. Now based on these two columns, based on these two columns, we can find the economic cost. Economic cost. So economic cost is, in the first situation, it's just 50 because there's no implicit cost. So economic cost and accounting cost both are same. But in the second situation, economic cost is 60, right? 60. Now, let me show you the calculation related to accounting profit, right? Accounting profit. So how do we find this accounting profit? From the total revenue, you just deduct the accounting cost, which is the implicit cost. So total revenue is 100, accounting cost is 50, so that the accounting profit is also 50. 100 minus 50. Then in the second situation, again total revenue is 100, again accounting cost is 50, so accounting profit is also 50. In both situations, that is equal. Now let me show you how to calculate this economic cost. Right? Economic cost. Sorry, economic profit. So how do we find this economic profit? That is total revenue minus the total cost. Right? Total revenue minus the total cost. So in the first situation, when there's no implicit cost, total revenue is 100, economic cost is 50. So that economic profit is 100 minus that 50. So once again 50. Right? And in the second situation, what happens? Total revenue is 100. Total economic cost is 60. So that the economic profit is 40. See that connection. See the connection. When the implicit cost is 0, accounting profit, economic profit, both are same. When there is an implicit cost, it could be 10, 1, 100, whatever. When there is an implicit cost, economic profit is always lower than the accounting profit. That's the connection. So, ඔය චුට්ට දන්නවා නම් මේකට ආන්සර් හොයාගන්න එක නැති. If there are implicit costs, like in the second situation, මොකද in the second situation there are implicit costs. මොකද වෙන්නේ? Accounting profit will exceed economic profit. See, accounting profit will exceed economic profit. 100% true. That's the correct answer for this question 17. එතර දැන් ඔයාලට මේ ටේබල් එක තේරෙනවා, ඉතුරු ටික අපි කතා කරලා කිසිම තේරුමක් නැහැනේ. හරිද? කතා කරලා තේරුමක් නැහැ. එනිසා we'll skip them. So come to the 18th one. In the 18th question, what do we get? We get which of the following is not usually a characteristic of perfect competitive market? එතකොට perfect competitive නම් what are the examples? Eggs market, basmati rice market. ඔය තියෙන ඕන තරම් කියලා කියන දෙකක් කිව්වා. ඉතින් ඒ වගේ තව ඒවා හිතා ගන්න. ඒතකොට ඕන තරම් තියෙනවා. Right. එතකොට what are the characteristics of such market structures? Mainly තියෙන්නේ මෙන්න මේ වගේ දේවල්. The products are homogeneous. Clear? There are large number of buyers, large number of sellers. Perfect information is available. The firm becomes a price taker. There are no barriers to entry or there are no barriers to exit. Or කිසිම දෙයක් නැහැ. ඊට පස්සේ there are no barriers to factor mobility. In the long run, all the firms earn only normal profits. ඕවා තමයි තියෙන characteristics. ඉතින් ඔය වගේ ඒවා මෙතන ඇති. A list එකේ නැති තව එකකුත් මෙතන ඇති. So we will find that. එච්චරයි කරන්න ඕන. Right. No individual firm has any significant amount of market power. 100% true. That's why I told you that we get large number of sellers. So when there are large number of sellers, the power, if not, the one firm has no power at all to influence the market demand or to influence the market price or maybe to influence the market supply. මොනවාක්වත් කරන්න බෑ ඒගොල්ලන්ට. එච්චරක් ගොඩාක් sellers ලා ඉන්නවා. Right. The second one, the market demand curve is perfectly elastic. ඔයාට නිකන් දැක්කම ඔව් මේක මට හොඳට මතකයි සර් ඔවා ගේම එකක් ඇන්ද කියලා එනවනේ ඔළුවට. ඔළුවට ආවට එහෙම එකක් ඇන්දා තමයි. හැබැයි ඒ ඇන්දේ that's not the market demand curve. ඔයාට හොඳට මතක නම් it's about the demand curve faced by one firm in the market. ඒ ඇඳපු graph එකටම left side ඔයා තව එකක් ඇඳලා තියෙයි කියනවා මගේ class එන්න ඕනේ නෑ ඕන class එකක ඕකට වම් පැත්තෙන් තව එකක් ඇඳලා ඇති. ඒ වම් පැත්තෙන් ඇඳපු එකේ ලියලා ඇති this is the market supply, this is the market demand. So based on the market demand and supply, the price is fixed at this, let's say rupees 20, right? So this is the market supply and demand. ඊට පස්සේ this is the demand faced by one firm. See, එතකොට demand faced by one firm is perfectly elastic, 100% true. But the market demand, see this now, the market demand is a typical demand curve which slopes downwards from left to right. එතකොට this is not a characteristic in the perfect competitive market. හරිද? ඒ නිසා මේවා කියවනකොට හොඳට කියවන්න ඕන. Third one, any individual firm can increase its production and sales without affecting the price of the, see the now, yes. If the price that is decided in the market is 20, they can just sell any given amount at the price rupees 20. No problem. How much they produce, that much they can sell. Right. So that is a characteristic in the perfect competition. Fourth one, the existing firms cannot bar the entry of new firms. See, the existing firms cannot restrict the entry of new firms. Cannot restrict because there are no barriers to entry and there are no barriers to exit. Is a characteristic of perfect competitive market structure. Fifth one, there are large number of buyers and sellers in the market. Yes, that is true. Right. Then the one which doesn't show us a characteristic in the perfect competition is this third one. Right. Now, question number 19. Look at this one. In question 19, it says, the table below displays some of the assumptions of perfect competition and monopolistic competition. Right. Which combination of assumptions is not consistent, is consistent with these markets? Okay, consistent ones, again, always true ones. Right, perfect competition, there are homogeneous products, 100% true. Monopolistic competition, barriers to entry and exit. No, again, just think about the eggs market. Eggs market, monopolistic competition, take tuition. If not, take hotels, take restaurants, whatever. Right, tuition industry or maybe hotel industry or maybe restaurants, whatever. Saloons, Right? There are no barriers to entry and there are no barriers to exit. There are barriers. So that is wrong there. Second one, differentiated products. Now, eggs නම් ඉතින් ඕන egg එකම තමයි. ඉතින් පාට කියන්නේ පාටවල් දෙකක් තියෙනවා. ඒක එච්චර හිතන්න. Right. Homogeneous products, no. Differentiated. In tuition industry, my teaching is totally unique to someone else's teaching. ඒ නිසා මේක දෙකම වැරදි. Large number of sellers. We have large number of sellers in the perfect competition. Small number of sellers, no. Even in monopolistic competition, we have a large number of sellers. හැබැයි comparatively චුට්ටක් අඩුයි, but still we have large number of sellers in monopolistic competition as well. It was a barriers to entry and exit. Yes, sorry, that's wrong. There are no barriers to entry and exit. And perfect information, yes, that is true. හැබැයි අරක වැරදි නිසා එක ගන්න බෑ. Fifth one, large number of sellers, true. Differentiated products, again true. So the answer for this 19th one is the fifth one. Question 20. A firm in perfectly competitive industry is facing the following situation in the short run. So their current level of output is 500 units. The market price is 6 rupees and the total cost is this much and the total fixed cost is this much and the marginal cost is this much. All right. So simply by looking at the given data, you can recognize that if you get the difference between total cost and the total fixed cost, it's possible to recognize the total variable cost. And how much is that? That's simply 4,000. That's not directly given to us, but we can easily find it. Okay, so by giving this data, what do they ask us to recognize? The firm whose goal is profit maximization should, okay, so we just need to select the next action that should be taken by the firm in order to maximize their profitability. Okay, so in questions similar to this, you first need to see, right, whether it's possible for this firm to earn a profit at this given situation. That's the first thing that you should do, right? So let me write it. Whether it is possible to earn a profit. And if it's possible to earn a profit in the given situation, if the possibility is there, then you can see what should be done. What should be done in order to maximize profitability. So this is the order. First, you need to see whether it's possible for the firm to earn a profit. If it's possible, then what should be done in order to maximize that, whatever the profit that they are earning. So how do we check the first one? How do we see whether it's possible for this firm to earn a profit? So there are two different approaches for that. The first one is you can see whether they are earning a total revenue higher than their total variable cost. If so, the firm is earning a profit. The second approach is you can check whether the price they receive is greater than the average variable cost. Once again, if this is how it happens, if price is greater than the average variable cost, once again, it's possible for the firm to earn a profit, right? So if one of these become true, then you can see what should be done in order to maximize the profitability. So let me explain that part in this way. So if you look at the MC and MR curves, right? Normally this is the shape of the MC curve and here you get the MR curve. And we recognize this point. Let me call this as the output Q2. So at this Q2 output level, the firm maximizes its profits. So what's the condition related to this? Here what happens, MC is equal to MR and MC is increasing. If not, at Q2 output, we can say firm maximizes profits. So that's a first point. And if I select a point somewhere here, right, and if I label that as this Q1 output, so if the total production right now, if the total production is at Q1 level, now you know that at this output, at the output Q2, profitability is maximized. So if their current level of output is just Q1, what should they do? They need to increase their output in order to maximize profitability. So that's the second point. If MR is greater than MC, right? If MR is greater than MC, like in this, MR is here, MC is somewhere below that. So if MR is greater than MC, the firm should increase, right? The firm should increase output, if not Q, to maximize profit. So this happens at Q1. And there's another point. Let me take it here. What if right now the firm is operating here at this output level Q3? So you know that their optimum output, the output that maximizes profitability is Q2, but they are producing higher than that. So in order to maximize profitability, what should they do? They should decrease the output this time. So let me write it properly in this way. What happens at Q3? MC is greater than MR, and once again MC is increasing. So that's what happens at this point 3. So let me write at point 3, right, at Q3. So now the firm should, we can take this one here, the firm should, look at this one, the firm should decrease, the firm should decrease the output to maximize profitability. right. ඔන්න ඔය ටික තමයි වෙන්න ඕනේ. එහෙනම් පළවෙනිම දේ මොකද අපි බලන? පළවෙනිම දේ තමයි we need to check whether it's possible for this firm to earn a profit. It's possible. ඒතර ඒ දෙක බලාගන්න මෙන්න මේ conditions දෙක fulfill වෙනවද නැද්ද? දෙකෙන් එකක් fulfill වෙනවා නම් අනිත් එකත් obviously fulfill වෙනවා. ඉතින් ওই දෙකෙන් එකක් බලන්න පුළුවන්. ඊට පස්සේ if it's possible to earn a profit, ඔයාට ඊට පස්සේ පුළුවන් to check what should they do in order to maximize that profitability. So if their current level of output is here, if it is below the optimum level, they can increase the output in order to maximize the profitability. If the current output is at Q3, if they decrease their output, they can again maximize the profitability. ඔක තමයි කතන්දර. එහෙනම් දැන් අපි ওই ටික follow කරන්න යන්නේ. එහෙනම් බලා ගන්න. So in this question, ඔයාට දෙකම apply කරන්න පුළුවන්. ඒ කියන්නේ දැන් මේ approaches දෙකෙන් ඕන එකක් apply කරන්න පුළුවන්. මම දෙකම apply කරලා ඔයාලට පෙන්නන්න. එහෙනම් total revenue. How do we find the total revenue? Tell me, how do we find the total revenue? Total revenue is equal to market price multiplied by the quantity. If not, if I write a simple equation for the total revenue, let me write it here. Total revenue is equal to market price into the quantity. Market price is 6 and the quantity is 500. So that the total revenue is how much? 3,000. So let me write somewhere here. If I apply this first approach, total revenue is simply 3,000 and the total cost. See, the total cost is given to you as how much? That's 5,000. So total cost is 5,000. So this is the total revenue and this is the total cost. See, අපිට වෙන්න ඕනි එක නෙමෙයි ඒකේ opposite එක තමයි වෙන්නේ. අපිට වෙන්න ඕනි දේ තමයි total revenue should be higher than the total variable cost in order for this firm to earn a profit. හැබැයි වෙන්නේ මොකද්ද? ඔයා ඒක calculate කරලා බැලුවට පස්සේ ඔයාලට තේරෙනවා ඒගොල්ලන්ගේ revenue එක, sorry, my mistake. This has to be total variable cost. Sorry about that. So this is a mistake, right? So their total variable cost is how much we calculated that earlier, and the That's just 4,000, but the same thing happens. See, their revenue is not enough at least to cover their total variable cost. Revenue is not enough at least to cover the total variable cost. It's no point of doing this production. They should immediately shut down the operations. හරි. එතකොට ඔය එක කතන්දරයක්. අනිත් approach එකෙන් ගියොත් එහෙම again price is how much? Price is given to you as 6. Right? Price is 6. And එතකොට price එක ඔය compare කරන්න ඕනේ with the average variable cost. See, if the total variable cost is 4,000, how do we find the average variable cost? You take the total variable cost, you divide it by the quantity. So total variable cost is just 4,000. We found that earlier. That's the difference between total cost and the total fixed cost. It was this should be divided by the output, which is 500 given here. So that the value is 8. අර දෙයමයි වෙන්නේ. කලින් එකෙන් reject වුණා නම් දෙවෙනි condition එකනොත් දෙවෙනි rule එකනොත් reject වෙනවම තමයි. එහෙනම් price is 6. Average variable cost is 8. So once again, price is lower than the average variable cost. එතකොට අපිට වෙන්න උවමනා දේ නෙමෙයි වෙන්නේ. වෙන්න ඕනි නම් මෙන්න මේ පැත්ත, හැබැයි වෙන්නේ අනිත් පැත්ත. වෙන්න ඕනි මෙතනත් මේක, හැබැයි වෙන්නේ අනිත් පැත්ත. ඒ නිසා පළවෙනිම තැනින් මේක fail වෙනවා. මොකද fail වෙනවා කියන එක මම mean කරන්නේ in this situation the firm is not in a position to earn a profit. Profit එකක් earn කරන්න නැත්නම් maximize කරන්න බෑනේ. ඒකනේ කතන්දරේ ප්‍රොෆිට් එකක් earn කරන්න නැත්නම් ප්‍රොෆිට් එක මැක්සිමයිස් කරන්න බෑනේ. ඉතින් ඒ නිසා අපි මේ දෙවෙනි ස්ටෙප් එකට යන්න උවමනා නැහැ. වැඩේ මෙතනින්ම fail වෙනවා. The firm should immediately shut down the operations because they can't even cover their variable cost from the revenue that they earn. ඒ නිසා the firm should immediately shut down. එතකොට that is the answer. එතකොට ඒක shut down කළොත් තමයි their profitability will be maximized. There will not be a profit, but the loss will be very minimal. ඔක තමයි වෙන්නේ. ඉතින් ඒ නිසා what's the answer then? The firm whose goal is profit maximization should not reduce. See, දැන් මේක කවදාවත් වෙන්න බෑනේ increasing its selling price. Selling price එක මෙහෙම increase කරගන්න පුළුවන් නම් yes they can cover the variable cost. The problem is they are operating in a perfectly competitive industry. So if this firm is operating in a perfect competitive industry, they can't influence the market price. They can't increase the market price or they don't need to even reduce the market price. දෙකෙන් එකක්වත් ඇත්තටම පළවෙනි එක නම් කරන්නම බෑ, දෙවෙනි එක කරන්න කී උවමනාවක් නැහැ. So they can't influence the market price. ඉතින් ඒ නිසා මේක කොහොමත්ම ආන්සර් එකක් වෙන්න බෑ. එතකොට ඒ වගේ එකක් කපලා දාන්න ඔයා මෙතන තියෙන options කියවන්න ඕනෙත් නැහැ. If it's a perfectly competitive industry, ඔයාලට කෙලින්ම මේ second option එක අයින් කරන්න පුළුවන්. ඊළඟට third one, have output unchanged. නෑ unchanged කළොත් ඒ කියන්නේ if they just maintain the same output, they will incur losses. For each additional unit they produce, they will incur a loss. ඒ නිසා ඒක නෙමෙයි answer එක. And the fourth one says reduce output to 0. Reducing output to 0 means the firm shutting down the operations, and that is the answer. The fifth one, increase output. See, no, even if they increase the output, their loss will be maximized, not the profit. Right? So answer for this question 20 is the fourth one. Now look at this question number 21. There, the sequence of phases of the business cycle are. The sequence means the order of the phases of the business cycle are. Okay. So to check the answer for that, let me keep this on this side. Okay. Now let's draw a business cycle. Right. So this is how it normally goes. So let me recognize this region or this point to be the peak. And then this is trough. And then this is again peak. So the region from peak to trough we recognize as recession, but in this question they have recognized that to be contraction. So no problem, we can recognize this to be contraction, and the region between trough and the peak we recognize as the expansion. Oh, එතකොට ඒගොල්ලෝ ඒකට expansion කියලාම කියලා තියෙනවා. So that is expansion. So this is the correct sequence. This is the correct order of the phases. ඒ කියන්නේ පළවෙනි එක මොකක්ද කියන එක අපිට වැඩක් නැහැ. sequence එකනේ මෙතන ඕන. දැන් පළවෙනිටම peak the contraction the trough the expansion the ඒක නෙමෙයි බලන්න ඕන sequence එක. දැන් example එකකට අපි බලුවොත් එහෙම contraction. Okay. They start from here, contraction. And the next thing has to be, if it's a contraction, the end of the contraction we just recognize as trough. But here it says it's expansion. No, see that the order is wrong. Right? Order is wrong. After contraction, it has to be trough, bottom. හැබැයි මේක එහෙම නෙවෙයි නිසා නොවන නිසා මේක වැරදි. Second one, contraction. ඊළඟට ඒකල කියනවා see this is contraction and the second thing has to be peak loop. That is once again totally wrong. That's not the correct sequence. That's not the correct order. Third one, contraction trough. Yes, contraction trough. And then peak. Okay, that is wrong. See, the third one is wrong. The third one has to be expansion. Before peak, we get expansion. So this is also wrong then. Fourth one, contraction. Okay, contraction is true. Second one, trough. Yes, true. Third one, expansion. Yes, true. And the next one is peak. See, this is the correct sequence. And the fifth one, contraction. No, after contraction, we get the trough. So that is wrong. So the answer for this question 21 is the fourth one. Now look at this question 22. Which of the following expenditures would be included in the calculation of gross fixed capital formation? Okay, so before I go through the answers, before I show you the answer, let me just show you the note related to this gross fixed capital formation. Right, look at this one. Here you get the note related to gross investment. If not, we just recognize that as gross capital formation. And here I'm telling you, this is the expenditure made on purchasing capital goods during a specific period. And this expenditure is categorized into three components. The first one, gross fixed capital formation. We have a second one and a third one, but we are not going to focus on this at this moment. Right. So look at the gross fixed capital formation note. It says this includes the investment made in fixed assets such as land, buildings, machinery, and equipment. These assets are used in the production process for more than 1 year. So if you need to recognize something to be a part of gross fixed capital formation, it must be a fixed asset, right? And what do I mean by the term fixed? You should have the ability to use it more than 1 year in the production process. ඊට පස්සේ we say gross fixed capital formation can be classified into two. The first one is produced non-financial assets. The second one is non-produced non-financial assets. එතකොට ඔය categories වලින් කොයි එක තිබුණත් that is a part of gross fixed capital formation. හරි. එහෙනම් දැන් ඔන්න මම මේ දීලා තියෙන examples ටික මුලින්ම පෙන්නන්න. Under produced non-financial assets, we get, see that now. These are the assets that are produced through production process and have a physical form. Ithara examples වල තියෙනවා houses, other buildings and structures, machineries, equipment. කතන්දර ටික තියෙනවා. Under non-produced non-financial assets, we get natural resources. Also we have intangible assets, patents, copyrights, trademark. Then we get the goodwill, brand name, lease agreements, license, patent rights. So these are the examples for non-produced non-financial assets. එතන මේවායින් කොයි එක අතන තිබුණා? That's the answer. Right. Now let's go back to the question. 22 says, which of the following expenditures would be included in the calculation of gross fixed capital formation? In part 1, option 1, buying a newly constructed house. The expenditure you make in order to purchase a house. See, in the set of examples, we got this. Under produced non-financial assets, we got this. එතන තිබුණ පළවෙනිම එක තමයි houses, dwellings කියන කතාව. Second one, buying a new luxury car. See, now this ඒක තමයි මෙතන වෙනස. Then this is a luxury car, so that this is much more towards consumption, not an investment. එතකොට if this is a consumption, we never take this as a part of gross fixed capital formation. Third one, buying 1,000 shares. See that now this is purely financial transaction and we don't consider them under gross fixed capital formation. The fourth one, commission paid to a stockbroker for selling stocks. See, this is again a consumption of, let me write, consumption of service. That's a consumption of service, which is again not a part of gross fixed capital formation. And the fifth one, money spent on corn cultivation in 5-hectare plot of land. See, corn cultivation, make them what hitana produced killer. But corn cultivation, you can't keep it for more than 1 year. It's got to make obviously this is just an asset, not a part of gross fixed capital formation. එහෙනම් මෙතන තියෙන options වලින් ඔයාලට ගන්න පුළුවන් option එක තමයි first one, buying a newly constructed house. Right. Question 23. Suppose GDP of a country in current prices increased by approximately 8% between one period and the next, but the real GDP fell by 2% in the same period. Which one of the following explanation is most likely to be true? Okay. So this is with regard to this real GDP, nominal GDP, and the inflation rate. එතකොට මම ඔයාලට එතන equation එක basic equation එක මුලින් පෙන්නුවොත්, so real GDP is equal to nominal GDP divided by the price index, which is the inflation rate, multiplied by 100. But if you look at this question closely, in this question they have given us the increased and decreased percentages. Increased and decreased percentages. එතකොට මේ වගේ වෙලාවල් වලට we can apply this growth rate rule. So according to the growth rate rule, මම හැමතිස්සෙම වෙන growth rate rule කියලා කියන්නේ ඔයා මේකට log දැම්මා වගේ කියලා හිතන්න. මේකට log දැම්මොත් එහෙම how would you do this calculation? ඔයා ලියනවා එහෙනම් එතන log values ලියනවා. නමුත් ඒ log දැම්මා වගේ කියන එකයි මම කියන්නේ, log ලියනවාම නෙමෙයි. එතන increase in real GDP is equal to, see, this is a division. This division, if you just convert this thing into log, division becomes a subtraction in log. What do? You take the increase in nominal GDP and division becomes subtraction in log. Increase in price index. Increase in price index rate of inflation. Increase in price index, rate of inflation. What is this? This is this growth rate rule. So if you get growth rates, this is what you do. And according to the question, if you try to fill the blanks in this equation, see, it says the current prices, GDP of a country in current prices increased approximately by 8%, which means the nominal GDP has increased by 8%. So increase in nominal GDP is 8%. And then it says real GDP fell by 2% in the same period. Real GDP, there's a decrease in real GDP by 2%. So we can find X, right? So when you find X, how much is that? X is 8%. This minus 2, when it comes to the other side, right side, it becomes 2%. So that X is how much? Then X is 10%. And what is X? X is the increase in price index. If not, that's the inflation. Simply 10% is the inflation, if not increase in price index. You are ready to select the answer for this one. So let me take this one here. Right, now look at this one. The first option says, right, the first option says general price level fell by 4%. No, there's an increase in the general price level by 10%. There's an increase. This value is a plus value, right? And then general price level fell by 8%. No, there's an increase by 8%. Third one, general price level increased by 4%. No, there's an increase. That's true, but that's by 10%. See, I see the answer here. Fifth option, general price level increased by 10%. That's the answer. For question 23, that's the answer. Right. Now look at this question 24. Here it says, an increase in which one of the following may result in a decrease in aggregate expenditure in an economy. එතකොට මේ වගේ ප්‍රශ්න ඕන තරම් අපි මේ කලින් papers වල කරලා තියෙනවා. මේ 2017 එකට කලින් කරලා තියෙනවා. ඉතින් මේ වගේ එකක් ආවම හරිම ලේසි. Right. So this is what you need to do. Wait. Let me send this one to this side. Okay. Now let's focus on this question. It says, which one may result in a decrease in aggregate expenditure? Okay. Aggregate expenditure consists of four components: consumption expenditure, investment expenditure, government purchases, and net exports. Right? So net exports, inside that we get two components, C plus I plus G plus within a bracket, let me write exports minus imports. එතන ගානේ අහන්නේ මොකද්ද? An increase in which one of the following may result in a decrease in aggregate expenditure in an economy. ඉතින් ඔයා ඕක බැලුවොත් එහෙම සරලවම ඔයාට හිතා ගන්න පුළුවන් ආන්සර් එකක් මෙන්න මේක. මොකක්ද? If aggregate expenditure should decrease, if this E should decrease, ඒක decrease වෙන්න නම් මේ පැත්තේ තියෙනවෙන් increase වෙන්න ඕනේ මොකක්ද කියලා යහන්නේ. ඉතින් මේ හැම එකක්ම ඇවිල්ලා positive values නේ. Positive values increase වෙන්න mathematics හරිද? Positive values increase වෙන්න even the aggregate expenditure increases. හැබැයි ඔයාලා හැමෝටම තේරෙනවා this M import expenditure is a negative value. එතකොට මේ negative value එක increase වෙන්න මොකද වෙන්නේ? Aggregate expenditure decreases. ඔච්චරයි. ඉතින් ඒ නිසා answer එක that's obvious. මොකක්ද answer එක? Import expenditure. ඔයාට ඕක තේරුම් ගන්න ටික කමාරේ වගේ නම් ඔයා හිතනකො E ගේ value එක එන්නේ මෙන්න මෙහෙම කියලා. මම මේ equation එක මානවත් ලියනවා. දැන් මෙතන මේ bracket එක දැම්මත් එකයි නැතත් එකයි. මොකද හේතුව this is a plus value and this is just a minus value. මෙතන bracket එකෙන් එළියේ තියෙන plus නිසා මම මෙහෙම ලියන්නම්කෝ ඔය bracket එක අයින් කළා. So C plus I plus G plus X, right? X minus M. Bracket එක අයින් කරගෙන තමයි සරලම කළේ. Right. Now imagine that the total of all these positive values to be 100. And in the first situation, this import expenditure I consider to be 10. Then how much is the expenditure? Expenditure would be, the aggregate expenditure would be 90. And in the second situation, I again consider the total of these positive components to be 100. And this time let me increase the import expenditure to 20. Then how much is the aggregate expenditure? That is just 80. See what happens when the import expenditure increases, aggregate expenditure decreases. So hope you can understand. So answer is the third one. The next question, 25th one. Assume that in a closed economy, aggregate consumption function is this and the equilibrium level of national income is this. So this is not something normally happens. Again, normally they ask us to find the equilibrium level of national income, but somehow in this one that is given to us, and by giving this, what do they ask us to calculate? They ask us to calculate the level of investment for this economy. And see, in the first part they have mentioned very clearly that this is a closed economy. If it's a closed economy, then මේගොල්ලෝ මේ government taxes අනමන මුකුත් කියන්නේ නැති නිසා this has to be a simple closed economy in which we find only households and business firms. If so, the equation of calculating this equilibrium level of national income is at the equilibrium, the income, aggregate income must be equal to the aggregate expenditure. But since this is a simple economy, this aggregate expenditure consists of two components. The two components are C and I. And the value of Y, the equilibrium level of national income is given to us as 4,000. So I can replace them. මම මේ equation එක තුල කොහේ හරි තැනක y ව දකිනවා නම් ඒ y මට පුළුවන් 4,000 කියන value එකත් එක්ක replace කරන්න. ඔන්න බලන්න. ඒතර y equals consumption is given to me as 200 plus 0.18 to y plus I. මම අර කීප එක මතකයිනේ. මොකද මම කිව්වේ? If the equilibrium level of national income, if that is given to us as 4,000, ඔයා මේ equation එකේ කොතනක හරි y ව දැක්කොත් ඒ y ගෙන් represent වෙන value එක තමයි this 4,000. So you can replace this 4,000 with y. So 4,000 equals, now you write 200 plus 0.8 into again 4,000 plus I. Then ඔයා මේක simplify කළොත් you can find this value of I. So this is 4,000 equals, you write 200 plus, this is 3,200 plus I. So 4,000 is equal to 3,400 plus I. Then the value of I is how much? 600. Very easy. So 4,000 minus 3,400. So I is simply 600. So that's the level of investment in the given economy. So the answer 600 you find in the second option. That's the answer.